Okay. Burner Market Trading Group, this is. I can't wait for it. And today we are going over Bollinger Bands Part 3. And we're going to be covering a bearish curve, also reaccumulation after you hit a higher high. And so just to recap, in the last series we had a higher high that went very bearish or bullish and came up and it shortened the distance between the two moves in order to get it to go up high uh, without taking too much time. And then once it hit a higher high, it started to distribute out their shares. And you know, once it gets down to a low enough spot, then they start to reaccumulate those shares in order to run it back up again. Because now everyone's already they're already in the mood to go up. You've got all this excitement that it's moving up, and so you've got all these people that are just now getting out of their shares as you're dumping it here, and thinking that it was still going to go up, and so now they're ready to get back in it. So they don't want to waste too much time, you know, getting these people back in the game. So what they do is they drop it down to a low enough area and start gobbling up those shares again. They hit absorption right here and immediately starts running up the price. And of course, you can see right here this very bullish candle right here. Retail was ready and they jumped in on this candle. And when it started to wane back a little bit, uh, institutional automatically just started dumping all their, not all their shares, but a portion of their shares to get it to come down again, so that all the rest of the retail that wanted to get in that couldn't because it was there wasn't enough shares to get, were now able to get those shares and go long and finish moving this up to this previous high. And once it hits this previous high, they start selling off these shares. And you can see, again, you see the indecisions green, and then immediately starts to, it was going up, created a new high, then starts turning red, which means that institutional is winning the fight on selling off their shares, and retail is not buying them up as fast as they're releasing them. So therefore, it starts to drop again. And so now, before I get any further into that right there, I just want to kind of come back and touch on some of these things. Now, in the last bullish curve, when price action broke outside the Bollinger Band, it worked its way back in and immediately started going up to the top there. And that's a very bullish move. Now, in this scenario, it broke outside here and it did kind of work its way back in right here, which is their kind of like work around their cheat. Instead of having to come back down and touch over here, they do it right there. And so price action does move up away from the Bollinger Band, then comes back down and touches it. And then you'll notice that as price action moves up, what does the Bollinger Band do? It drops. Now over here, Bollinger Band, as price action moves up, Bollinger Band does kind of move up with it. And then price action drops. And this would normally kind of like move with it, but it doesn't. It stays going up and it touches it and keeps going. It doesn't start to move down until it hits the upper Bollinger Band again. Now over here, it hits the bottom Bollinger Band. It starts to go up, but the Bollinger Band goes down. Price action hits the top Bollinger Band, goes for the higher high. Bollinger Band's going even further down. What is that telling you? Now they've hit distribution, and then they start dumping their shares. And normally this would come down and hit the bottom Bollinger Band at this point right here. But because this didn't follow, price action has to continue to dump until it hits that bottom Bollinger Band. And it doesn't hit it until the third dump right here. And then they just release the mother load. Boom. And that drives the price down to a deeper low, to a more affordable area. And that gives them, a lot of, that gives them a better run up, because now this is their last previous high. So now if they can get all the contracts down here and soak up the float down here, they can make twice as much money as they were making before. And so one of the things that you'll look for is, one, the Bollinger Band dipping down. Instead of going up, it's going down here, and then also it dips down as it hits a higher high, which is completely opposite of what it would normally do. And then watch price action dump as it touches on the third dump here, and the Bollinger Band dips down even deeper to go for a lower low. Now, one of the things I want to point out is, look at the shape of the Bollinger Bands right here. It looks like an elephant's head. And this is the trunk over here, and this is the elephant head. This is the forehead, this is the bottom jaw, this is the neck. You know, get all this mess over here, just where the dump starts. Now, whenever you see this shape like this, that's a very, I don't know, bearish kind of move. And so price action does dip down to a lower low here, and it does paint candles outside the Bollinger Band. And it does come over here and just misses the bottom Bollinger Band. But don't confuse this with a bullish move because it hits the top first. It did try to make a run for it right there, and it just didn't hit it. But that said, because of this short run over here, this this higher high, and then it dips down, and then immediate run back up to create a new higher high. Because of that move right there, it messed up the curve, and typically that would be 5 touches to the Bollinger, 4 touches to the Bollinger Band, and it was done in 3. 1, 2, 3. And so therefore it's kind of offset. So now where this would normally be a short run down and then the spring to bounce back up, instead goes for a deeper dive into a much deeper pool of liquidity. And so that's why this is a very bearish curve, because this doesn't finish the curve until over here. And that's nowhere near where they want to be. So it has to continue into another curve to finish this movement for them. And so this whole setup right here is all very bearish. And then it starts to become bullish after that. And so now we got a touch here that runs up the upper Bollinger Band and goes into a very bullish move. And so you know what? I'm going to finish it right here, and I'm going to do another part to cover the continuation of this move. So just know that it took two curves in order to finish this one move for them, because of the short run up that they did, because they wanted to just go ahead and take advantage of the pool of retail that wanted to go up, that was ready to go up. And so they took full advantage. And so you'll see it right there. After they hit a higher high, they just take advantage of that pool of retail that wants to go high. And you can see it's very apparent right there on that very bullish candle that retail was waiting for this to pop back up. And so they were keen to this move going up, and they jumped in early, and then they, institutional sold off a big, a portion of their shares in order to get to go down enough to saturate the float enough for the rest of retail that was waiting to get in to be able to have contracts to jump in on. And once they jumped in, it's made the price soar up again, almost the exact same amount as the last one. So that's the end of this series, or this part. And thanks for tuning in. If you got any questions, hopefully I kind of I gave you some answers there. But if you do have questions, put them in the comments below, and I'll be glad to answer them. And this is I Can't Wait For It, and I'll see you on the next one.